How are we, everyone? Today we'll be talking about the big bounce and the recovery within the Nasdaq and somewhat in the ASX. We'll also cover some of the movements there, as well as copper. We've seen some interesting moves in copper you want to share with the crew, and also maybe some Bitcoin at the end there. There's some interesting moves happening in the crypto market as well. G'day folks, welcome to another Closing Bell with me, Charlie Ormond, joined by Chief Trader here at Fat Tail Investment Research, Murray Dawes. G'day Murray.
Hello there, g'day everyone.
I guess we'll start with, the cheerier news this week, recovery within the ASX, recovery within the Nasdaq.
Yes, well, it's actually pretty boring out there, quite frankly. We've been clutching at straws looking for something interesting to talk about as we head towards Christmas time. It sometimes Christmas can be, it just dies and the volume dries up and nothing moves for a month and a half. But, and we've got Thanksgiving in the US, so coming into the end of the week.
Markets are closed.
Markets closed over there, everyone's on holidays, they take the Friday off as well. So everything just goes silent for a while. So we shall see whether the US can really break back to the upside again. We've had a little bit of a correction and everything's starting to heat up again, which is good. But Aussie stocks are still looking a little bit nervous. The microcaps you were talking about this morning, they're off 15% from their highs. We are seeing some buying come back in, which is good. But I think the Aussie market's just looking a bit weaker than the US. So I'm hoping the US can really, reset off a little weekly buy signal for us and maybe spark a little Santa rally, which would be nice. But it's not quite there yet. And it's in one of those dangerous points where if there is selling about, it is on the weekly charts where the sellers can step back in. So it's sort of that moment where everyone starts to get bullish, and then all of a sudden you look back and go, oh, geez, that's where I should have been selling.
Yeah, it's a really interesting time for the market to go quiet, with the Thanksgiving break, because what we've seen in the massive turnaround on the Nasdaq was kind of the impetus has been this kind of very quick change in expectation of rate cuts, right? So if we talked about 2 weeks ago, the expectations of rate cuts for December from the Fed was down something like 30%. It was tiny, and then we had within a 4-day period a series of Fed chairs come out with some very dovish speeches saying, maybe cuts are actually going to come. And now the expectations have turned around. Now they're at near 90%. I think they're 80% expectations for cuts now. And that seems to be one of the big things that sparked this kind of comeback rally that we've seen in the Nasdaq.
Yeah.
But now with that signal gone, the ASX is still kind of just creeping along.
It's trying to be dragged back. It's really got hit pretty hard. It's because the ASX itself was down about 8%. But microcaps down 15%.
Right.
So it just gives you a bit of a sense. There was actually quite a bit of carnage, especially some of the hot stocks, a bit of that profit taking, the best stocks over the last 6-12 months, that they got hit pretty hard. And I'd say there'd be fund managers out there who have had a pretty damn good year this year.
Oh yeah.
And as you come towards the end of the year and you're thinking about your bonus, and you're saying, well, I'm up 25% for the year. I'm going to get a huge bonus. But tell you what, if the market gets hammered into Christmas, my bonus might get halved. So I might just take some profits here and lock in my gains for the year and not take too much risk as we head to the end of the year. So you can end up, things just coming off the ball a bit. But I just wanted to show that S&P just quickly, because this is where it's tricky for me, where I don't want to put my neck out too far. Because it's still in a weekly uptrend, monthly uptrend. The US market is stronger. And I've sort of said before, I'd need to see, let's say, that weekly trend actually turn down. Because markets can have weakness for weeks and then, rally again and whatever. As long as that weekly trend is marching higher, this could actually end up just being a little buy signal within the weekly uptrend, where it sort of has a retest of the longer term moving averages. And then if we get the weekly buy pivot here, so it's not going to be much further, a little close a bit higher than last week's high, all of a sudden that does look like a little weekly buy signal. And all of a sudden it could just race to the upside again. So I'm all for that. That'd be nice. I'd be quite happy about that. But it's because it's not quite there, because we've actually started the selling. We've got the weekly sell pivot. We've then had another bad week last week. So for me, this is sort of that spot where everyone's starting to get bullish, But if the sellers do come back in quickly and we don't get that weekly buy pivot, it can all of a sudden be tipping over again, and that will be when the weekly weekly trend will actually shift.
Right.
So we're really at that point. It's decision time now. Are we going to see the Santa rally, or is this all of a sudden another little wrong footing, everyone? And so the way I'd look at this now is back under last week's low is a real line in the sand for us. If we tip over again and head under there, that will pretty much confirm that weekly trend shift. And you can see there, once the momentum shifts, everyone's like, panic, let me out of here. So that's sort of how I'm looking at it. I don't really care either way. I sort of hope it does take off, which will help us, but I'm a little skeptical because of what's been going on. And line in the sand, last week's low, under there, watch out. It can have another little dump.
Right.
But we're right on the edge of, yes, let's kick off that Santa rally. I'm not going to call the Santa rally yet, but it's right. It's right on the cusp of giving us a nice little sign.
Okay, well, like zooming out from the macro, that we've got 2 weeks until the next Fed meeting, right? With the expectations of cuts there, so maybe there is a great little impetus for a little Santa rally coming out of that.
Yeah.
But at the same time, the reason why there's expectations of cuts now is because we are seeing weakness within that US market, right? Like the September job reports were pretty positive in terms of
and just all of the problems with repo. And there was, and I know it's the
Fed plumbing is quite arcane.
Fed plumbing's been a bit under pressure, but we also had the government shutdown, the growth of the TGA, the Treasury General Account, which is the US government's money parked at the Fed. That built up huge in a big way because they were building it up anyway because it had got low.
So when they build it up, they're drawing liquidity out of
the market.
Yeah.
So you've got that grew because the government shut down. Money wasn't flooding back into the economy. Banks' reserves were going down, repo levels down.
Consumer spending
all
was
of a
down.
sudden, liquidity was a bit of a problem, and so you had rates spiking in that overnight loans and that sort of thing. So that could have just been a bit of plumbing with the government shutdown and that sort of thing. So maybe that's just a short-term thing that's just going to wash through and all of a sudden be better. But if the Fed's now saying, we're going to cut rates, maybe there is something a bit more going on. They really need to get liquidity going again, but maybe
it's very hard for the market to tell though, right? Because of those October shutdown, we've got no GDP report coming through, like no third quarter GDP is going to be released, no jobs report for October, no CPI report for October. So there's a lot of unknowns there in terms
what's
of
actually going on.
So it's really hard to see. But it is an interesting move, and this will really lead the way for the ASX. Should we have a look at the ASX? Because that's kind of been trundling along. It's
been a lot weaker than the US. It probably always is. We certainly underperform. This is where I'm sort of saying, look, and I was showing you that the US was still in weekly uptrend. So big picture, the US is looking pretty solid, really, and it won't take much for it to look great again. But ours, we have actually tipped over into that weekly downtrend. So and it was quite a sharp sell-off. So now that we've sort of done that, and we've also broken below that February high, that's where I'm just sort of saying, well, okay, we are recovering, and it can all of a sudden look good, but I'm wary just of, there's that big range there, and that's a massive run. So we've had the initial sort of sell-off. So if we do head back up into this sort of sell zone area, that little area there, that's where I get wary of the big sellers going, right, I'll actually take some now because I'm worried about it tipping over again. So if it has a rally into that area and then we see the selling return, all of a sudden you do end up falling back to that midpoint. So it's sort of looking like that. This is a similar thing here, where you've got you start to tip over, and you've got the weekly trend turns down, and okay, it does rally, but it goes back into that area, and the sellers are there, and it does end up tipping over again. So that's where it can take a while for the market to actually tip over, and this is where you don't want to be, where you get. It rallies like this and you get super bullish again and you end up, you're buying up here, and I tell you what, you regret it if it does that. So that's what all I'm wary of is the setup is saying, yes, if the US can take off, we can have a nice rally, but I'm even considering I might lighten or take a bit of profits if we do get a nice run to there, especially if the selling does appear again.
And I guess the bigger challenge within the ASX and the Australian economy is that we're at a very different point with our central bank, right? We've just had
inflation.
The latest inflation report in October, 3.8% up from 3.6% of September. Really bad. Looking at 5.9% of that was just in housing, which also includes electricity, which we've seen has been a big cost as those rebates roll over and people are paying more. Food and alcohol was up 3.2%. Recreation and culture up 3.2% as well, and that was down prior.
Just everything.
Everything
keeps going up.
Yeah. When's the RBA going to be able to cut rates? It's going to be pushed out till next year. There's people talking about maybe the chance of rates actually going up, probably slim, but that's still within the lexicon. So,
well, if you're thinking the US is going down, we're probably going up. The Aussie dollars, when's that going to start?
We're starting to see some movement in there. There has been some early movement, but it's not really probably enough to warrant showing today.
No.
But it is a big concern for us. I mean, like with the RBA holds high for longer, it's really going to drag on the ASX and what we can do. So maybe you're right in terms of that caution. We'll see what happens with it.
Yeah, it's just that now that we've tipped over to that weekly downtrend, that's just for me. I now need to see some good positive signs before. I'm just a little bit wary watching that where that Aussie market is right now. But that it can switch back on and look fabulous again quick enough. I'm happy to change my tune as if the market tells me to. Really.
Yeah, fair. Well, something that is looking a little bit more fabulous: copper markets. We're at 4-week highs. We've seen some near was at 5.1. I think it's looking pretty solid. Interesting moves going on there. We've seen with Caldeco, the massive Chilean producer, has completely flipped the script in terms of its dealings with China. What have we got there? Their last offer they had for China, which is about $89 in the last year's talks, is now $350 per ton. So they've really changed it. So maybe there's this idea of they're favoring a trade towards the US, or maybe it's just this whole supply deficit imbalance really coming to the fore. But there's a massive bullish signal there.
Yeah, well, apparently they're in deficit this year, 500,000 tons or something, copper concentrate, and will be the same again next year. So it is starting to tighten up a bit. I know there's been a lot of coppers gone to the US, which was to avoid tariffs. So you've got a bit of a lopsided market as far as inventories out the rest of the world and smelters needing it. And so I think that the London price needs to sort of rally to try to get some of that copper back out of the US. So there's a bit of an imbalance because of Trump and his tariffs and that sort of thing. So that might be stuffing things up a bit. But just the picture for copper has just been really strong. If you consider versus nickel and lead and aluminium, I mean, it's just this chalk and cheese. Copper has just remained strong despite a very weak resource market. So in that situation, when resources take off, I'd expect copper to be the strongest.
Right.
To really break out and because it's just been holding in there so beautifully while everything else has been hammered.
Well, the other ones
just showing you that real strength is there.
The other ones have also been hit by some pretty massive supply coming along in Southeast Asia, right? Within all those zinc and the rest have just absolutely been pushed from Indonesia, Malaysia, huge mines coming online, huge production. So it is a very different story. I mean, there is still copper supply slowly getting there. It is still coming online. I remember I was reading South Africa's largest gold miner, was it Harmony Gold? They're bringing in like a multi-billion-dollar copper mine into Queensland. We just put plans for it. So there is more supply coming online.
BHP with their huge projects and that sort of thing.
They just got kicked back from an attempt at Anglo again, right? It was their second go at it. Completely kicked back. So what does that tell you about their feeling about their actual inventory, what they've got in their minds? So there is still this idea of like maybe there's not quite enough copper coming online.
Well, I mean, and for me, just because we're looking at the charts, this is the very long-term picture, and I've been watching this for quite a while. I mean, copper has been pretty much stopped at around $5, and that's going back to 2010, and even then, it's still around that level anyway. So that's 450 to 5 has just capped copper for a long time, and we've had every single time it's sort of got there. Look at the size of the drawdowns. We've pretty much had pretty serious crashes every single time, but every time is a little bit less. And now this is where I'm saying everything has been selling off massively, but copper has just been holding in there, and it's sort of like for me that shaking up the Coke bottle. And it's just getting ready now to actually say we're breaking away from this level. And we're going to see a year, and it could be 2026, where copper actually does that and freaks everyone out. That's sort of how it looks to me, is like there's this pressure built, it's been building and building and building, and all other metals have been smashed. It's held in there around here. So if we do see a commodity bull market, I just think copper is ready to really trend. And maybe it is the story for next year.
Yeah, maybe it's an interesting combination between, the classic Dr. Copper, where you're looking at the gold versus copper ratio, the idea of, when people are bearish, they're buying gold, and when they're bullish, they're buying copper because of all the industrial production things. Maybe it's a story of both of those going up in terms of a debasement hedge, as well as a potential, hedge towards a really, really great year next year. Be an interesting one. Another interesting move we've seen is Bitcoin.
Oh, yes.
Similarly bouncing like the Nasdaq. It does tend to lead or follow with the Nasdaq, but that correlation is breaking down a little bit. But we have seen just shy of a 15% recovery in the past week from Bitcoin after a brutal sell down. Went from, what was it, in the 110,000 US down to 80. So it was a huge drop.
But Bitcoin, the volatility of the thing is so immense.
Yeah.
But it's sort of been interesting. The reason we're talking about it today is it's sort of fitting in with the structures I'm looking at, and it is quite technical the way it trades. I mean, all of my theories on how things move, I could show you it does certainly fit in, but I don't sort of talk about it too much because it's not my area of expertise. But just watching this lovely trend that we've been in, you can see there it's just very strong bullish momentum, the higher highs, higher lows, so you're sort of following along these wave structures, and I'm just looking at that most recent wave, and you can see it has had that sell-off right into the buy zone there perfectly, pretty much. So, if you're either dollar cost averaging or you're just wanting to punt and have a trade on it or whatever, it's sort of looking like, okay, it's in that area where you'd be interested, and I'd say it's probably a high probability of a move back to the point of control at least. And if not, if it does swing all the way up, you're looking at a move, back into that sell zone area. But I would just be wary and be taking risk off or creating these free call options that I talk about, where you're taking part profit or whatever on the way up, because on the monthly it is actually possibly sending a monthly sell pivot this month, the first one in the rally for a long time. And I can show you, I'll show you in a second, that has been a pretty good predictor of a bit more of a sell-off. So at the moment it's a buy. It looks pretty good. If you're a trader and you're getting long, you're pretty wary if it does break below that wave low, because that could be the shift in trend. It could really collapse below there. So you sort of got a pretty tight stoppy, and you're trying to capture the move back to the point of control or the swing up into the sell zone. So that's a pretty clear trade. But then if I was looking at the monthly, this is where I'd be just getting a little wary, because it's a pretty solid monthly sell pivot. And if we just consider in the past, we had that massive run from under 10 grand up to 60, 70 grand that time. So there is a sell pivot there, and often you do get sort of a retest or a rally back to retest the highs, and then another wave down. That sort of thing can happen. So but we've had a massive run from those lows up to that high. Here's your first real major possible monthly sell pivot coming in. So that's where I'd sort of be going, okay, often what happens is you get that, and then you do, as I said, get a rally to see whether the selling pressure's there. If it's not, and it takes off, fine. But if the selling pressure's there, it can be the beginning of a much bigger sell-off. That's all. So that's what I'd be saying is short term looks like a good buy. Longer term is, even though it's all in long-term uptrend, looks good. I'd just be a bit wary of the fact that we've now got that monthly sell pivot, and it's not until we actually get the buy signal again that you'd be saying, okay, actually it's fine. So that'd be my only view on it, would be, short term looks like a buy, probably will rally, but you'd be taking some profit when you can to de-risk, because there is a possibility it could rally and then have its next wave down.
Yeah, it's interesting because as I was saying earlier, I've been watching it quite closely this year. It's been very tightly correlated to the Nasdaq. It's kind of seen as that kind of front-running risk indicator, similar to the Nasdaq in terms of betting on those higher risk tech names. But that's broken down in the last couple of months where it's really going much lower than the Nasdaq. So maybe it's people who are leveraged getting washed out. Maybe it's a bunch of that. But it's also maybe a signal of trouble in terms of that liquidity, as we were talking about earlier, being taken out.
Yeah.
And a lot of people argue that Bitcoin and the M2, the total liquidity supply, are very interlinked in that sense. So maybe it's a sign of hey, we need some more liquidity in the system.
There is some problems under the surface. Yeah.
So it's a cautious one, but it is an interesting one to kind of track where that risk is going and where the sentiment is there.
Yes. So that's all we could find.
Yeah,
this week.
That's this week. We'll find some more interesting things hopefully next week when we get some more actions. But I think we'll leave it there, Murray. Thanks for your insights. Thank you all for watching, and have a great time.
Yep. We'll see you next week.